Hi, everybody. Welcome to the pre-market analysis that we open up to the public every single Wednesday. Thanks for joining us this morning. This is Spartan speaking, by the way. Giving you guys a little bit of a breakdown of what's going to happen this morning. So once I'm done speaking here on this little intro, Beth's going to come on, give you a breakdown of the macro environment, any news events that happened over the course of this evening or this morning, go through any of the bigger picture items that make sense to be looking at today, as well as, ETFs, commodities, bigger cap names as well that are going to be relevant. Once that's done, I'm going to go through the names that I'm looking at that are gapping up, gapping down. We'll talk about the news associated with those gap up, gap downs, build an action plan for them, as well as go through the SPY, the FANG, the Qs, the VIX, and the IWM. After that's done, I'll go ahead, pass over to South Beach. He'll come on, give you a breakdown of what he's looking at from an individual stock point of view, macro environment, as well, money rotation perspective going into this morning, and then I'll come back on. We'll do a quick little recap of those individual names that I talked about. We'll go over that action plan, and then we'll be ready for the open. So without further ado, I'm going to go ahead, pass it over to Beth, and I'll talk to you guys in a little bit. Beth, if you're ready, it's all yours.
All right, my friend, thank you so much. Good morning, good afternoon, good evening. Welcome, Wednesday, pre-market, FOMC, you know the drill. We have a lot to talk about. Well, we always have a lot to talk about, but we really have a lot to talk about today. There's the commodity super cycle is in full force. We know this to be true. Let me get up my screen. So today we're going to talk about basically three things. First thing, obviously, is the FOMC, preparing for that, what we're looking for, expectation. And we're going to take a deep dive as to why the set of macro levers we've never experienced before. Right? I mean, this is reality. The paradigm that we're in is uncharted, and as a result of that, I think a lot more challenging, and it's not as simple as people think it is. Okay, in terms of recession, stagflation, yada yada yada, bonds, et cetera, et cetera. And we'll go through that in a little bit. Then we're going to talk about. We've talked about midterms, how that's a shit show. We know that. And then we're going to do a little bit of a deep dive today on natural gas as well as lithium. And there's a reason for that, because these are areas that we like to focus in on in terms of opportunity. Okay. All right. So first off, let's take a look. The one big difference between everything else we've experienced going back in time is that we've never had the set of commodity supercycle, inflation, yada, yada, at the same time having such a tight labor market. That's the first thing that is dramatically the unknown, that we don't know what's going to happen here, okay? The commodity supercycle in and of itself brings us to like the 1970s with the embargo, yada, yada, but even then it's not the same, all right? In my lifetime, this is my third commodity supercycle. Yes, I'm that old, but it's so much different in so many ways, okay? So you have to, all of these are layered on in terms of the Fed. The statistical probability of them getting right is 0%. It's that simple. So what does that mean? What it means is, and I know that Paul Tudor Jones was talking about that, South Beach mentioned it yesterday about the mortgage back. And we've talked about it, that this is something in an interview that you should watch on CNBC from yesterday, right? The reality is, if they do a balance sheet, aggressive balance sheet, that's a double tightening, right? So if they do, like, say, 50 basis point, the most important thing right now is the balance sheet, as far as I'm concerned. And I think the market is it's an unknown, and that's a huge red flag. What happens with that? If they are aggressive on the balance sheet side, that's a double tightening. So a 50 basis point hike plus aggressive balance sheet unwinding, okay, would basically be equal to probably one whole basis point, as opposed to 0.50. So it's 100 basis points, right? That's a big deal. The penultimate question we have today is, what has the market priced in? That is the penultimate question. I think we have a handle on the Fed funds side. Look, no matter how you slice and dice it, Fed funds need to be 4 to 5%. That's it. ASAP. If you're really going to get ahead of this stuff, right? They're not going to do that. So then the other offset to that be, what do they do with the balance sheet? I don't know, but that's the focal point as far as what most people are concerned about right now is what they do with that. Notable yesterday, look, you know, the API crude stocks, this was more of a draw than expected. Look, I think the economy is doing a lot better than anybody really understands, mainly because of the tight labor market, but a lot of things. Look, earnings are better than, for the preponderance of earnings are better than expected. I think it's the fear of the unknown going, you know, 1-2 earnings cycle out, what that's going to look like. The reality also is there will be companies who know how to make money, continue to make money, will grow, will have dividends, yada, yada, yada. That's a fact. Okay. All right. So let's see what's going on here in terms of the macro stuff coming out from overseas. So actually, as expected, balance of trade, well, whatever. Okay. Retail sales worse than expected out of the European area. Okay. Notable. We did have an increase on the mortgage backs that we haven't seen since March. I guess this is important, right? We'll see what the unemployment, don't forget, we got unemployment on Friday. That's another thing. ISM, yada, 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 and we'll see how that plays out. Mrna, dear Lord, I was fortunate. I got a great fill on the gap up on Mrna. And I know Spartan's going to be all over this one today. Uber, Lyft, a tale of two tapes, right? Right. So, I mean, it's holding up, but obviously, you know, it's way off the lows from the Lyft debacle. You know what? Now we look forward, right? The reality still is oil names, we're going to see a divergence. We're starting to see the balance sheets improving across the board on these refiners, not so much the miners yet, but the refiners on both natural gas and oil. You know, they're going higher. I know I sound like a record, but anyways, look at this, guys. I mean, look at the preponderance of this in terms of positive earnings, surprising on the upside, right, versus disappointing. There aren't that many that disappoint, okay? But those that do, you know the drill, right? Now, yesterday, Starbucks, I'm very excited about that. And I know that, you know, it's out of the penalty box, so I can start doing stuff longer dated. This is a company I love to trade, but I've been kind of sitting on my hands because they were in the penalty box. With the upgrade, it looks like they're out of the penalty. So these are the types of things I'm looking at, you know? Okay, that soft landing, but history said, look, every single article you read will say the same thing. They're behind the curve. Sticking a soft landing, it's 0%. Okay, but what does that mean? And this is the key point right here, why the labor market is relevant. And this is why it's so important we understand they've never had these challenges before with such a tight labor market, as well as inflation. Never happened before. Right? Look, we've talked about, this is the Burns era. So this is the model of what not to do. Okay, and this is what the biggest fear that Powell has is being basically thrown in the same camp as Arthur Burns, the worst Fed chair on record. And he was there for 8 years. Okay. So what does the dude do? The dude went from 6% to 11% in a matter of 8 months, caused a recession. Then basically the market sold off, yada, yada, yada. And then the recession happened. Guess what? Inflation came back. Okay. Negative GDP, unemployment 7.2, but inflation was 11%. What does he do? Goes from 9% to 13%, back down to 8%, shit show, right? The reality is, it is so hard, okay, to manage the set of, from a Fed point of view, what's going on. You can go back as far as you want. It's so hard. That's why there's a 0% statistical probability. All right, yesterday, something important happened. There was a real shift. A big shift in the end of the year Fed funds rate, okay? Basically, this went from 34% down to 21%. This went up to 54%, but look what happened here. This went from 13% to 21%. This is a big deal, right? Now they're starting to, I think, look, whether you like Bullet or not, okay, the dude is right in this regard. All right, shock and awe. But what is the market priced in? The market has not priced in shock and awe. They're starting to price in shock and awe, but they have not priced in shock and awe. This is all that matters. Now, let's take a look at 2023. Where are we? Right? We're not seeing any real shifts, okay? But if you notice here, July of 2023, okay, we're basically talking about, this is still ridiculously below where the Fed funds rate needs to be, ridiculously below. So what does that mean? We're going to be behind the curve. Yeah, statistically, they're behind the curve, and they'll continue to be behind the curve because they have the Fed funds rate plus the balance sheet. It's just impossible. All right, for those of you who want to see what happens real-time live, Wall Street Journal has the Fed statement tracker. This is the previous, this is the new, so we look for that. U.S. job openings quits reach March records in tight labor market. This is it, guys. All right, fantastic. This is actually out of Bloomberg, but you can read it if you want to, this article, through the Washington Post. Okay, they are printing it. The reality is the FOMC right now has no credibility. How do they get it? I don't know. The lack of clarity in certain ways is shocking. They have been basically sitting and messing around with this balance sheet. They have not given any clarification, specifics on the balance sheet reduction. Shame on you. You're talking about, oh, we're behind the curve. You're talking about Fed funds, stuff like that. You're not doing anything to tell us what you're going to do on the balance sheet. You're signaling stuff, but you're researching it. We want to know specifics more than what you're saying right now. Okay, all right. This says it all right here. This will be the biggest loss since 1920 in terms of bond holders. 1920. This is unprecedented, and this is why we're in a territory we haven't seen. This is a big deal. This is world government bonds. This is a big deal. That's wealth destruction, right? You've got the, and that, look, the indices don't reflect what's really going on, okay? So you will have wealth destruction on two fronts, on the bond side as well as on the equity side. Jolts, like I said, this factory orders are stronger, right? We're underestimating the stickiness of this commodity super cycle. We're underestimating the strength of the economy. You know, it's kind of depressing, right? EU proposes ban on Russia thing. You know, good. All right. Musk, I don't know what the hell to tell you about this stuff, right? You know, Yellen and Bill Gates speak at a summit, notable. Civilians describe desperate efforts to flee. Well, you know, what can I tell you? All right, let's see what the Chinese have to say. Young technicians are preparing for the upcoming world skills competition known as the Olympics for vocational skills. Why don't we do this? I'm sorry. We have really no money going into vocational training. Anyways, I know. All right. Thursday's your last chance to buy Apple before the dividend payout. Notable. Who cares? Dear Lord, cannabis, drug, dude. The dude is older than Methuselah, and he's basically, dude. Okay, come on. This is the present and future. Seriously, cannabis convictions. What? AMD, fantastic, right? So the guy who basically talked about the delisting leaves. Uh-oh. He may be on the Jack Ma trip, right? Anyways. This is kind of fascinating, right? Twitter's top advertisers face pressure to ensure adherence to content standards. What the hell? With Musk, what are your content standards? Anyways, let's move on. All right, Barron's. Two questions. There we go. We'll see. 100% odds, Fed will. Okay. Anyways. Yesterday. We're back. I think there's going to be a FOMO on the oil names, on oil. I think we're going to start the next leg up. That's my story, sticking to it. Let's take a look on the other side. Mining, silver, gold. Don't forget, meaningful lows tend to happen in gold on FOMC day. Metals, water supply, utilities. Flow. Really interesting stuff yesterday, right? 67% call sweeps to 33%. Let's take a peek. Well, let's take a peek at our 2QQ guy, right? That's what we want to do. Okay, back. Like this is a trader that we really, really, really love, right? Let's see if we had anything on the SQQQ. So this is an actual strangle that a friend put on as well. Okay. All right, just today, AMD, 119 million shares, as well as on the option side, and they got it right. Okay. Apple, well, this would make sense, right? Because of the divvy. Nikola, I have no idea what to tell you about that Novavax, right? What's being hyped this morning? Church and Dwight, healthcare, yeah, realty, IMO, J&J. Insiders, selling Delta, Palo Alto, X, buying AUOX, Lab, APON, GE, IHOT. There's a lot, guys, of buying going on there. Insiders selling. We're doing ahead fantastic numbers though, guys. LTHM, that's what's popping. We're in this as a swing. Starbucks. It's on the downgrade side. CVNA. You know, the CVNA, it's so hard. I try to sell it and I always get stopped out of it. Lift on the downgrade from positive to, well, yeah, okay, obvious. But what's kind of interesting is I don't really have much on this side except Scott's Miracle-Gro, right? I want to talk about quickly seasonality. The reason why I don't talk about it is, okay, so I got this in my email about the seasonality here on the biotech, right? 12 out of 16, this is going back 16 years. But if you go back 10 years, right, it's 9 out of 10, and then 15, 12 out of 15, okay. Here we go, right? This is what it looks like. What's the big thing about this is what it looks like when you do midterms. That's right. Midterms creates an incredibly unstable market, at least in terms of the seasonality. All right. Let's talk about sentiment. All right. This is a big deal. Okay. So this is the XLF breath. Look at this. This is really dramatic. Do I think we're going to bounce? Probably, but you know, what can I tell you? This is what the financials, after a percentage of financials above the 50-day moving average is less than 5%. First time in greater than a year. This goes back to 1955. But if you look at the 70s, red, 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 red. I don't know. So you take it this, but you there's a caveat on all of these. 1 year out, 70%, 4.1, 8.5. S&P, going back to 1955, after the financials. Bullish, 75, 70%, 6 months, 1 year. Short term, shit show. Long-term trends are very poor. This is unhealthy, we know this, all right? What does it mean? Well, you know what it means. When a bear market, this is a stock pickers, penultimate stock pickers market, Spartan's brilliant data, and away we go. Okay. I mean, look, I mean, I can't, this is why we do what we do here. We provide you with opportunity. S&P midterm elections, I cannot impress upon you enough how bad this is. This goes back to 1933, friends. Okay. 11 up, 12 down, 50-50. 50-50. This is it. 50-50. The maximum is 13.3, 14. This is S&P, right? But the cumulative May through September of a midterm election, I showed this to you before, May through September, max, look at how this goes from 13, 14.6 to 26 but 29, 12, 10, 55, 45, average up 9.2, average down 13.3. We're not kidding around with this stuff, okay? This is a big deal, right? If you look at it, January through September, 34.94%. That's what we got going on here right now. Okay. Just saying. All right, heat map reset. You can see here we're starting to reset on the breath. Flows. Money coming out of XLK, XLY, XRT, XLF, XLU, a little bit up. XLE money going into, XLV money coming out of, XLP money going into, XLB money going out of, XLI money coming into, Qs into, SPY out of, Dow up, and I'd have them down. All right. Here are the bonds. Okay, yield curve continues to flatten. All right, let's talk. This is why it's fraught with danger. Okay, all right, let's take a look. This goes all the way back to the 50s. All right, this is GDP. Okay, we're basically reverted back to the mean. You can see that right here with this line, right? This is the inflation rate. So here we are. Where was the Fed funds when we had this sort of inflation rate? Even if we look here, Fed funds was 9%. We look here, okay? This is a problem, all right? This is why, this is the graph that shows you, oh shit. Now, if you look in terms of recession, the probability is nil right now. Well, I shouldn't say that, it's starting to go up. Okay, here's the unemployment rate. Look at the tightness in this. It is, there's zero chance of things getting right. I mean, like zero chance of things getting right. And here's productivity. Like I say, really impossible. Bonds are going up, 5-year, starting to grind to the top. 2.5, you can see this is really interesting. We did have a little bit of a pancake yesterday in terms of the yield curve actually steepen. Now it's starting to flatten again a little bit on the shorter end. This is the 5-10 flagging, you know what that means. Continue. I don't know what happens here. I really don't, okay? But in theory, if we're going into a recession, the yield curve has to invert. I mean, it's literally that simple, right? There's a 10-year, Chinese, whatever, right? Here's the gilt starting to break out, and here's the German rate starting to break out. I mean, look, we got to get back into this quadrant. I mean, this is not easily, this is where we got to go, right? All right, cryptos, meh. That's the dollar, actually. A little bit, that triple top still holding, friends. And here's the Chinese yuan. This, I'm telling you, this has to go higher. They have to continue to weaken this. The reason that, the fact that it's up here tells us that the economy is doing a lot worse, right? That's not what I want. Commodities, here we go. Let's talk. All right, here's gold down a little bit, plating, platinum. Look, rotation, rotation, rotation. We've been really fantastic. Natural gas funds breaking out. I lifted off my ad on the boil, but I added to my UNG calls, but I'm gonna scalp again and add on the break, and I posted the break. The pivot was 113.99 on boil. Okay. The reality is I'm in all kinds of natural gas names. Here's this is UNG CTO. We really have to see this. Why do I want to see this? I want to see this breakdown. Why do I want to see this breakdown? Because I want to see the refiners start to outperform the actual physical. That's what I want to see. Here's crude natural gas. We talked about this, guys. I know this was when we had that crazy ass USO problem back in the 2020. Okay. But irregardless, even if we get back down to, here, you're still seeing a 20% outperformance of natural gas above crude, right? This is flagging. They had good earnings. This is going to start to go higher. A lot of these little junior ones, and you know that. It would make sense to everybody, right? What I'm in. I like the smaller ones, but the bigger ones are moving as well, right? I like the EQNO. Look, natural gas, oil names, all of these refiners you got to be in. The balance sheets improvement on a sustainable move in this and holding up here, their balance sheets, the market has not priced it in. End of story. Gold, let's see, because of FOMC, whether we've done anything there. All right. Once again, I want to introduce you to Matt Bolson. We talk about him a lot. He is the best of the best. He's an Australian. He's on Seeking Alpha. Read his stuff. He's really brilliant when it comes to minerals, anything. The dude is a beast. Okay. The research he does is fantastic. All right, let's take a look at BATT. Looks like we have a meaningful low here, right? His LIT, meaningful low here. We're trying to reclaim. Let's see if we can, right? His LIT, BATT. There's really nothing there. But anyways. All right, so I want to look at some of these junior miners. Let's see what happens here. This is one of them. This is Chinese, right? Albemarle, on the miner side, lithium, right? That's something we look at. SQM. This is another one overseas. PILBF, OROCF. So I'm looking at these junior minor ones, right? LTHM. Look at this guy, it's fantastic. Going higher, right? This has been a patience game for us on this one, but it's going higher. Right? It should get back into the 30s pretty damn fast. I'm pretty confident that Spartan's going to be on this one as well. Off of the analyst upgrade, right? Rio Tinto, another one. BHP, these are all lithium, right? You don't think about it, but they are. Now this LAC is really interesting because it's really underperforming right now. So this should be a catch-up trade. I also like SLI that I'm in, and this is LAC SLI. These are US companies, obviously. I think this also is going to be a catch-up type trade, right? Here's GLCNF. This is a junior. This is Glencore, right? This is LAC. Now this is the battery, all right? You can see that. So, we should start to see some of these names starting to get perky again. They've been very consolidated for months now. PLN is a favorite, but I like the junior lithium names, to be honest with you. All right, here's PKX. These are all junior, these are lithium names that we don't normally look at. So I'll see if any money rotates into these. BlockTech. Now, these are all names that you can do your research. If you go to Seeking Alpha, just look at Matt Bolson. Okay. And we can go down here in terms of his list.
All right, Beth, I'm ready to pop on whenever.
All right, my friends, enjoy.
All righty, guys, I'm just going to pop up the screen share here. So if you guys are new to chat, have already done so, make sure to click that Discord link that's emailed to you. When you do pop into Discord, it's going to look like this. Make sure to leave the server, guys, if you were in the free server before you do click that Discord link, so it just assigns you the new roles. And then I'll show you guys where to go, after. But click on the new to chat information, scroll to the top, read from the top down, essentially. Anyways, pre-market tickers on watch, guys. What are we looking at today? A couple different things. So we have Tesla, Mrna, Acom, AMD, Lithium, and Lyft. So let's have a look at these names today. Tesla gapping down slightly in typically the market. Mrna earnings beat. Well, actually, the market's gapping up. Tesla's just gapping down a little bit. Mrna earnings beat. EPS and revs year over growth 213.3%. Stocks gapping up. Accom earnings miss. EPS and revs year over growth 7.2%. Q2 guidance lowered. 2022 guidance lowered as well. EPS and revs gapping down. AMD earnings beat. EPS and revs year over growth 70.9%. Q2 guidance raised. 2022 guidance raised. Actually, pretty good earnings on AMD there. Lithium earnings beat. EPS and revs year over growth 56.5%. 2022 guidance raised. Gapping up. And then last but not least, guys, Lyft earnings in line. Whoops, this should be down, by the way, or negative. Earnings in line, EPS and rev beat year-over-year growth 43.8%. Q2 guidance slightly lowered, and that name did get pretty decently gutted there. So a little bit of a sell-off. Let's take a look at these names from a technical standpoint intraday. First two we're looking at today, Tesla and Mrna. So those are the two we're looking at first. Let's have a gander. So Tesla here, at the moment, pretty flat. Let's see that daily chart. Wait a second. I'm just gonna load up one thing, guys. And the levels are gone there for some reason, so I just had to reload my charts. They should be up. There you go. So Tesla and Mrna, there you go. There's my levels. Okay, so Tesla gapping up, or no, sorry, gapping slightly lower. Pretty much flat from yesterday. Pivot to the upside today is going to be 909.03. Levels able to hold, we're towards 927.02 to 947.41. Unable to hold, we look for pullback on Tesla where it's 887.03 towards 868.40. It is still bullishly consolidating on the daily off the lows, trying to reclaim that EMA support to the upside. Pivot's going to be an important level, of course, today. If we're able to hold that, we should see continuation higher. I'm going to be leaning on the bullish neutral side this morning. Looking for a little bit more of a push. And then we can see what's what. Of course, we need to be aware of the, obviously it's FOMC day today. So I think, you're going to get some consolidation on everything before the FOMC actually does come out. We'll keep an eye on that little downtrend too in the short term. But yeah, going to be leaning bullish neutral, looking for a push into that little downtrend area. Then we can see what's what and whether or not we get continuation there. Mrna, let's have a look at this. It's a little bit of a push off the lows today. Let's label that 50 MA. That's an important level. Cool. Resistance levels here. Yeah, that's that one. All right, let's have a look. Cool. So Mrna coming off the lows, downtrend broken on the daily, EMA support, short-term reclaimed. We got room for continuation if that 156.32 pivot can hold to 160.57 to 164.11. Unable to hold, look for a pullback towards 151.27 to the 146.78 level on the downside. Overall on Mrna, going to be leaning bullish, neutral, looking for a continuation push higher if that pivot point is able to stay intact today. So that is Tesla, that is Mrna. Let's take a screenshot of these two. Let's move on to the next. All right, Tesla and Mrna. All right, next two names, Accom, AMD. All right, so a calm gapping down about what, 13 points, something like that. Yep. Pretty much right to that lower end range. You did slightly break it at one point, but two end levels of support there. This will probably be the pivot right there. All right, let's take a look at this thing on the daily here. Okay. All right, 99.35 pivot to the downside today. This level is unable to hold towards 96.98 to 94.98 on the downside. Able to hold, look for a push towards the 101.47 to the 103.58 on the upside. Overall on a calm, going to be leaning bearish. Looking for basically any sort of bounce this morning to take short for continuation lower. So that is a calm. Let's take a look at AMD here. AMD. So we're at what, like 97 a share, something like that. One of those will go. Okay, I could keep. Okay, 98.07 pivot to the upside today. Level holds you towards 108 cents to 101.59. Unable to hold, we look for a pullback towards 94.51 to the 91.78 level on the downside. Overall on AMD, going to be leaning bullish, neutral, looking for a continuation push higher today if that pivot point can hold. So a matter of getting back above that 98 spot, then it should push into the hundreds, which will be the 15 EMA on the daily. That should be the magnet, I'm thinking, on the upside at least. That is that. All right, so that's a calm. That is AMD. Let's take a screenshot of these two things. Let's move on to the next two, LTHM. Oops. And left. All right, LTHM, let's take a look. So obviously gapping up a little bit, 27 bucks. I was actually surprised that they raised guidance. Nice and positive for the lithium names. 26.79 pivot to the upside today. Level holds 27.56 to 28.31 will be tested. Unable to hold 26.03 to 25.08 on the downside. Overall on lithium, going to be leaning bullish, neutral, looking for a continuation push higher today if the pivot point can hold. Let's take a look at left. All right. Okay. All right, pivot to the downside today, 22.76 on lift, levels able to hold 24.17. The 25.91 will be tested, unable to hold 21.43 to 20.51 on the downside. Overall on left, going to be leaning bearish, looking for continuation to the downside today. Looks like we can get into the 20 level on the downside, and that's where I think the magnet is, to be honest. That is lithium, that is left. Yeah, lithium left. Can take a screenshot of them both, and let's move on. All right, let's take a look at the SPY and FANG. So what's going on in the market here? New levels. That should suffice. Okay. So pivot to the upside today, 418.37. Levels able to hold 420.67 to 423 will be tested. Unable to hold 415.02 to 410.81 on the downside. And then upper end levels, I'm going to just go a few more just because it is FOMC today. So you got 424.74, 427 on the upside. Then lower end level, of course, is that recent range low on the SPY, which is 405. So right now at the gate, I'll be leaning bullish neutral, looking for a little bit of a continuation bounce. I think you'll get some short covering into the FOMC, which will cause the market to push a little bit. And then it's going to consolidate most likely right before like the first or about hour and a half, whatever. And obviously on the release, we'll see what happens. I have no idea in regards to the direction of the market. But yeah, that's what I'm thinking for now. And then you have your lower end and upper end levels just in case you need them. So that's the SPY. Let's take a look at Apple. Pivot to the upside today will be the 160.84 level holds, 162.24 to 164.14 will be tested. Unable to hold 158.02 and then 154, well, basically 155 on the downside. And again, I'll be leaning like the SPY bullish neutral out the gate. Looking for a continuation push higher if the pivot point can hold. That's Apple. Let's take a look at Amazon. Pivot on the upside today, 25.25 level holds, 26.12. Unable to hold 24.39 to the 23.68 on the downside. Actually leaning more on the bearish neutral side of Amazon today, looking for continuation lower, but more of like a grind to the downside. I don't think it's going to be, complete, large sell off or anything like that. More of a fade, slow fade. That is Amazon. Let's take a look at Netflix. Okay. Pivot to the upside today, 214 level holds, 203.15 will be tested. Actually should be 204.77 will be tested. That level breaks 210.45, unable to hold, look for pullback towards 195.21 to the 190.05 on the downside. Overall on Netflix, they need bullish neutral if the pivot point can be reclaimed. So that's Netflix. Let's take a look at Google. Uh, 23.30 pivot to the upside today. This level is able to hold 23.69 to 23.94 will be tested. Unable to hold 23.05 to 22.75 on the downside. Overall on Google, going to be leading bullish neutral, looking for a continuation push to the upside today if that pivot point is able to stay intact. Not a bad chart there. Let's take a look at the let's take a look at the SPY and the sorry, not the SPY thing, the IWM Qs.
Oh, sorry, but you didn't do Facebook.
VIX. I'm sorry about that.
You have to do Facebook.
Oh yeah, I knew it in this one. Okay. Facebook. All right, guys. Best looking at the FANG names. 212.87 pivot level holds towards 217.56. Unable to hold 207.83 to 204.04 and leaning bullish on that. So there's your Facebook, guys. All right, now let's do the VIX Qs IWM. 2909 pivot level hold towards 3007 to 3204, unable to hold 2745 to 2622 on the downside. Not leaning any particular direction, guys, but watch that pivot essentially. That's the VIX. Let's take a look at the QQQ. $317.44 pivot level holds room towards 322.24 to 326.82. Unable to hold 314.96 to 309.64 on the downside. Overall, the Q is going to be leaning bullish, neutral, looking for a continuation push higher. Let's take a look at the last but not least, guys, IWM. So off the lows a little bit. Okay. Pivot 189.34 level hold turn towards 191.61. Unable to hold 187.94 to 186.35. And I'm going to be leaning bullish neutral as well, looking for a retest at the top of that recent range high, and we can see if it's able to, break through it after that. But that's where it's got room to this morning if that pivot point's able to be reclaimed. So that's what I'll be looking for. So that's the SPY, that's the FANG. Those are the individual names that we're looking at today, guys. Going to go ahead and pass it over to South Beach while I type up a pre-market action plan, and then we'll do a quick little recap for the open. South Beach, if you're ready, it's all yours.
Morning, guys. Fed day, huh? Okay, so let's see what we got for Fed day. Okay, let's look at the bonds. So unchanged on the 10-year, 297. Okay, and interestingly enough, the 7 years 303, the 5 years 302, the 3 years 3. So all three are higher in yield than the 10-year. And the 30 years about the same as the 10-year at 3%. So you even have a 5-year yielding more than the 30-year, which leads one to believe that, as this thing flattens out and even inverts somewhat, the betting is that the recession is more likely. I don't know that it's likely, but more likely than it was before it inverted, when the curve is positively sloping. All right, so you have, and the spread between the 2 and the 10 has narrowed somewhat. It's down to what, 1.14. So about half of what it was early last week. Okay, and interesting, I've noticed like there's a half a point increments between a bunch of different countries, and they've been staying that way. Let's see. So the 10-year in London is 2%, more or less. In Germany, it's 1%, more or less. And in France, it's 1.5. So you got 1, 1.5, and 2. All right. And that's the way it's been through this whole, past 5 or 6 months. The 10-year in Japan is, of course, being artificially kept low for whatever their reasoning is. Who the hell knows? But 0.22 over there. Okay. So that's the bond market. Let's look at commodities. So oil's up $5 or $4 this morning, based on EU trying to wean itself off Russia's oil supply over the next what they say year or two. So they don't want to take any oil, and they didn't say gas, I don't believe, but certainly oil. So a couple of countries in the EU are dependent on it. You know, they're going to have to get oil from other places, ergo oil's up this morning. Okay. So that's oil. Let's look at Brent natural gas. Natural gas is just ripping. This is what, day 2 of the rip. It's up 6% today. So energy is definitely a problem as far as this inflation that we're facing, and it's an issue, guys. Gold is irrelevant. Copper's, you know, trailing off, I think, as home affordability gets worse. I think it's the worst it's been in what? I read something like 25 years. This copper goes down. And I'm just thinking to myself, I mean, you know, prices haven't really changed, but with, you know, I think the buyers and sellers are definitely in a different place. Okay, because the sellers are trying to get the prices that have been in the outlook, you know, that have been trading at for the recent, you know, 6-7 months. And with the price of mortgage rates a lot higher and the economy getting dicier and the chance of recession increasing, you've got to, you know, the bid-ask spread is widened somewhat. And I think that the sellers are going to have to realize that they better come down if they want to get their places sold. So I think you're going to see softness in housing prices. Maybe not in the no-tax states. I think that'll hold up the best. But in a lot of other places, I think it's going to be pretty obvious. So that's copper. Let's move on to the agricultural commodities. Now, to answer your question, Spyro, I'm noticing that a lot of commodities are coming off pretty good. Okay, so depending on the commodity. Now, wheat is a little bit weird, but it's come off. Weird because Ukraine supplies so much wheat. Okay, so that's kind of like a separate issue. And corn has been stubbornly high because it uses a lot of phosphates. All right, and phosphate prices are up a lot. So that's a problem there. But I've noticed like a lot of the other commodities are coming down really hard as of late. Sugar's come down a lot. Places, you know, if the Ukraine isn't supplying it, I see price, you know, sugar, coffee's come down quite a bit. Oats has come down quite a bit. Lumber, not so much. Cotton has been stubbornly high, but for the most part, I've seen softness in commodities contingent on more or less where the commodity is coming from. They're elevated, yes, but I see them coming off somewhat. All right, currency-wise, the dollar's down against North America, down against the yen, down against the Chinese currencies, but still holding those, you know, levels that, you know, from the strength in the last week or two, okay? And the euro just doesn't budge. All right, crypto world, they're having a good day today, 3% across the board, more or less. Yeah, 3% across the board, Bitcoin, Ethereum, Solana. And let's look at the foreign markets, okay? You have the FTSE down 30. That's about 0.4%. Germany's come back a little bit. It was down 40 earlier, now it's down 4. So it's come back pretty much, recouped most of their losses. China, like I said, they're trying to get their stock market up. It doesn't look like the US is buying it because these stocks are down pretty hard here. But they were up about 2.5%, Hong Kong down 1%, et cetera, et cetera. Okay, so today's the big day with the Fed. The real question, guys, is let's say, I don't think they do a dot plot today. I know they have the numbers come out at 2, they have a conference call at 2:30, but something I read said the dot plot doesn't come out until June. I don't know why that would be the case, but that's what I read. So who knows? The question is, let's say he's gets more hawkish. Okay, and on the other hand, let's say he's not as hawkish as people think. What will the market like? Okay, will the market want him to be super hawkish to quash inflation and get this over with? Or does the market want to keep rates low so that stocks are more attractive? Thanks, Beth. Okay, so there's the reason. It's dot plots quarterly. So I don't know what the market's going to do, but ordinarily, 9 times out of 10, the market will have a reaction, and the first reaction is invariably incorrect, and the market will flip and go the other way pretty hard. So I'm just going to take my direction from the market because quite frankly, I don't know what the market wants. Let's say he, for argument's sake, he did 75 basis points. I don't think he will, but let's say he did. And let's say he's, saying he introduces the fact that he may do 75 next month or what have you. Is the market going to get smoked on that, or does it rip on that he's, believing what he's seeing and he's putting an end to it? We don't know. It's anybody's guess. All right. I just am not sure. My guess is, if my intuition would be that the market would like him to be aggressive, okay, to put an end to this. But we don't know. So we'll see what it says. If I knew for sure, guys, I would tell you. I just don't. And we'll see how the market reacts. Okay. I think his verbiage will be hawkish, but his, he'll stay at 50 and he'll say, I intend to be aggressive, but I want to see the numbers, et cetera, et cetera. He'll present a more pragmatic approach, but we'll see. Okay. His biggest problem, the way I see it, is the only thing he can try to quash is demand. Okay. And the issue is supply. A lot of the problems is supply because of the snafu, because of the pandemic, and this war has caused a real disruption in supply. And I keep reverting to the red team, blue team division is hurting supply. Okay, so there's a lot of reasons that are out of his control why inflation is taking a hold. So the only thing he can do is raise rates enough to quash demand, and we'll see if he's capable of doing it. The trade deficit came this morning. All right, 109.8 billion for the month. That is the highest trade deficit ever. Previously, it was 89 billion, 89 and change. So it seems like the U.S. is, economy is still pretty strong. Demand is still high, and he's got to quash that demand or inflation is just going to get out of control. All right, so we'll see what happens there. Okay. So that's that. Then you got China. So it came out today, some group came out and said, there's been an espionage stealing US secrets since 2019, aimed at industrial manufacturing. And I don't know, does the US do that same thing? I don't know why we would steal trade secrets from those guys, but maybe other things. I'm not quite sure, but I don't know how you do business with someone who's constantly trying to steal from you. I mean, putting it on a personal level, if someone came into your house every day and, stole money from your drawer, would you let them in the house anymore? Probably not. So it's a mess. Okay. And the world is in, geopolitically, it's a real mess, and that's affecting the supply. All right, so who knows what's going to be. So that's, it's just more geopolitical confusion. Let's put it that way. That moves us to Russia. Let's just move on. What can you say? All right, so there's nothing to say that we don't already know about. Okay, crypto. All right, it's been acting with high PE tech. Maybe it separates sometime, but in my opinion, it hasn't separated yet. So let's see how that goes. Oil, we discussed. The virus, you know, in the US, it's part of everyday life. I think that's how it's become. You get the virus, you go home, you hang in your house for 5 days, you have the sniffles, you have a cold, hopefully that's it, and you move on with your life. Not so much in Asia yet, but that's keeping demand kind of a little subdued. So when that ends, I don't know what's going to be, but we'll see. Okay. The dollar we discussed, Mr. Market. So yesterday it was really what was good. Big oil and E&P was strong. Machinery was strong. And on the converse, you had high PE tech, you had hotels, etc. Okay. So that was yesterday. I am noticing this morning, it looks like, you know, earnings wise, the negative for the first time in a while is worse than the positive. You know, like you have some stocks up and you have some stocks down, but by and large, the losses seem to be a little more brutal than the gains. So I think that's the environment we're currently in. The market technically looks kind of crappy, and we'll see if we can change that. I don't think we can at this point in the cycle. Now that he's, you know, raising rates in earnest, I think you have to wait for him to get halfway through the cycle, and then we can start looking at, you know, buying stuff for good, you know, and like making some real money on the long side. But I don't think we're there yet. That's just my opinion. All right. What else do we have? Jamie Dimon was talking. U.S. economy very strong. I'm trying to see what else he said. That's about it. He didn't say anything we didn't know. All right, so that's that with him. Trade deficit I discussed. Okay, so let's look at earnings wise. Okay, see what we have there. Well, let's wait before we do that. Kathy did nothing overnight. I mean, really nothing. I don't think she did a trade. SMFR insider buying, as was RILY, Riley. That was strong yesterday. And in syndicate, there's one IPO from Roth. These guys suck, so forget that. And there's a secondary in FRPT, 4.3 million at 81. Okay, stock closed at 82. So that's that. And Hood, Robinhood is introducing stock lending. How can you guys use an app where you can't short stocks? I don't understand. This company should be a freaking donut, in my opinion. I don't even understand why it's in business, quite frankly. I don't get it. I mean, every other, unless there's, you know, something for, like, if you know, I don't know. I don't know why you would, maybe they accept smaller doses, smaller amounts of money. I don't know why anybody would use these guys. I don't get it. I really just don't understand. Okay, so as far as numbers came out today, on the good side, you had Mrna was strong, Starbucks, AMD was strong. Now, it appears as though AMD is taking market share away from Intel. So you might want to, if you don't like that group, maybe you short a little Intel. LTHM, a lithium name, had really good numbers. Oatly was good. That stock has been an absolute pig. SMCI, PAYC, Generac was good. Starbucks, we said. LITE, Airbnb was good. LFUS, LNG was good. MSTR, Marriott was good. It was up a bunch. Now it's coming in. The prices these guys, I think travel and leisure is going to fall off in a hurry. That's what I think. I think the prices they're trying to get are just nuts. Okay. Caesars was a good number. What else? AIG was decent. STWD, CVS was good. ABC was good. Okay. Let's see what else we got. BXC increased share repurchase. RVSN was a volume mover. ACON also a volume mover. SATL signed some kind of agreement with SpaceX. It's up on that. And now let's look at the short side. Okay. You had IAG, gold company missed. Lyft, that was pretty ugly. I was watching his interview on CNBC, and I would say the guy was horrific. Okay, horrific. I mean, like the guy seemed like a bumbling moron. Tupperware missed. Herbalife missed. Akamai missed. WK, ANDE, BFAM, Revolve, RVLV missed. Eat. This may affect that group. Okay. Sit down dining. I think the prices that restaurants have risen to are just nuts, and I think people are going to start avoiding them. Amrin, NVTA, that's another Kathy stock. Would it go from $60 to $6, $60 to $5? She's the biggest holder of this one. She seems to find every branch on the ugly tree. I mean, it's really incredible. It's hard to believe how bad she is. She's went from best to worst in a real hurry. I remember seeing her on TV spewing the virtues of this CRISPR group, like they're going to change the world. It changed the world, all right. Anybody who invested in them got poor in a hurry. IDXX missed, JCI missed, Mitch, and they have a new CEO, Match.com. Wingstop, here's a lesson for you guys. When a CEO leaves a company for no good apparent reason, you know, he's got stock options and all this other jazz, it's generally a good idea to be negative on the stock. And the CEO left and the stock hasn't had an uptick since. I mean, straight down affair. Now the market hasn't helped, but the restaurant group is not like this bad, 190 to 89. So when you see a CEO leave for another opportunity and the stock has been strong, get the hell out of Dodge. Okay. SWKS, I saw it in Perigo also. Okay. The guy left, the stock went, you know, down 90% within the next year. All right. So that's another one. Tupperware, Race, SWKS. Okay. So a lot of misses. I think trading is going to be choppy until, you know, 2 o'clock, 2:30. And I plan to trade very lightly until that time. And that's really it. Okay, so let's have a good day, guys. You know, the real action starts at 2 o'clock, but until then, you know, we'll think, trade smart. It's all you, buddy.
All right, thanks, South Beach guys. Morning. What's going on? So if you guys are new to chat and haven't already done so, make sure to click the Discord link that's emailed to you. Make sure to leave the chat if you are part of the free chat before you click that Discord link, because that is where it's going to assign you all those rules. After you've done that, go to the new to chat information section, read it from the top down. We'll go through that once I do close down the YouTube stream. Pre-market tickers on watch, guys. Let's have a look at what we posted today. So if you guys are on the YouTube stream, you can just pause it and just read these comments on the action plan. You can see all the charts are posted, of course. All right, let's take a look at what we got going on this morning. So a couple things: Tesla, Mrna, Accom, AMD, Lithium, and Lyft. Tesla gapping down slightly from last day's move. Mrna earnings beat EPS and revs, year-over-year growth 213.2%, gapping up on that. Accom earnings miss EPS and revs, year-over-year growth 7.2%. Q2 guidance lowered. 2022 guidance lowered slightly, EPS and revs. AMD earnings beat EPS and revs, year-over-year growth 70.9%. Q2 guidance raised, 2022 guidance raised as well. Lithium earnings beat EPS and revs, year-over-year growth 56.5%. 2022 guidance raised. Lyft gapping down, earnings in line, EPS and rev beat, year-over-year growth 43.8%. Q2 guidance slightly lowered, stocks gapping down on that. Let's take a look at these names from a technical standpoint intraday. So Tesla and Mrna, let's have a look. So Tesla 909.03 pivot, levels able to hold towards 927.02 to 947.41. Unable to hold, look for a pullback towards 887.03 to 868.40 on the downside. Overall on Tesla, going to be leaning on the bullish neutral side today, looking for a reclaim of that pivot and a continuation push higher if that level can hold. Mrna pivot to the upside today is going to be 156.32 levels able to hold. 160.57 to 164.11 will be tested. Unable to hold 151.27 to 146.78 on the downside. Overall on Mrna, going to be leaning bullish neutral if you can get back above that pivot point as well. Let's take a look at a column. Let's take a look at AMD. A column 99.35 pivot level holds towards 101.47 to 103.58. Unable to hold 96.98 to 94.98 will be tested on the downside. Overall on a column, going to be leaning bullish neutral, looking for a continuation push higher today if that pivot point can. Sorry, leaning bearish, looking for a pop and topping for that name to come back down. Let's take a look at AMD pivot 98.07 level holds towards 108 cents to 101.59. Unable to hold 94.51 to 91.78. Leaning bullish on AMD, looking for continuation higher today. Let's take a look at lithium. Let's take a look at Lyft. Lithium 26.79 pivot level holds room towards 27.56 to 28.31. Unable to hold 26.03 to 25.08 on the downside. Overall in lithium, leaning bullish neutral, looking for a continuation push higher today. Let's take a look at Lyft pivot downside 22.76. Unable to hold 21.43 to 28.51 will be tested. Able to hold 24.17 to 25.91 on the upside. Overall on Lyft, going to be leaning bearish, looking for a continuation lower today. That's lithium. That is Lyft. Let's take a look at the SPY and the FANG. All right, so SPY. 418.37 pivot to the upside today. Level holds room into the 420.67 resistance breaks. We see the 423.04 tested on the upside. Pivot unable to hold. Room lower into the 415.02 support. Breaks, we see the 410.81 level tested. Going to be leading bullish neutral here. Looking for a continuation push to the upside today, of course, if that pivot point can't hold. So we'll see what happens in that regard. Let's take a look at the rest of the FANG here. So Apple, what do we got? Apple pivot to the upside today is going to be the 160.84 level holds. 162.24 to 164.14 will be tested. Unable to hold 158.02 to 154.99 on the downside. Meaning bullish neutral there. Amazon pivot to the upside today is going to be the 25.25 level. This level is unable to hold towards 24.39 to 23.68. Able to hold 26.12. Meaning bearish neutral on Amazon. Let's take a look at Netflix. Pivot to the upside today. 214 level holds 204.77 to 210.45. Unable to hold 195.21 to 185.44 on the downside will be tested. I guess it's 185.60 to be honest. All right, that's what it should be at least. Overall on Netflix leading bullish neutral. Let's take a look at Facebook. Pivot upside today is going to be the 212.87 level holds 217.56. Unable to hold 207.83, 204.04 leading bullish neutral there. Google. Pivot upside today is going to be 23.30 level holds 23.69 to 23.94. Unable to hold 23.05, 22.75 downside. Overall on Google leading bullish neutral. Let's take a look at the VIX Qs IWM. VIX pivot on the downside today. 29.09 levels unable to hold 27.45, 26.22, able to hold 30.07, 32.04. We'll see what happens there, not leaning any particular direction. QQQs pivot 317.44 level holds 322.24 to 326.82. Unable to hold 314.96 to 309.64 on the downside will be tested. Overall on the Qs, going to be leaning on the bullish neutral side there as well. And IWM guys, last but not least. 189.34 level holds 191.61. Unable to hold 187.94, 186.35 on the downside. Leaning on the bullish neutral side there today. So that is the SPY, the FANG, and the IWM Qs and VIX. So that's it, guys. We'll see what happens today. Again, FOMC day If you guys are watching the YouTube stream, there's that free link to our Discord in the description there. You don't get access to all the channels, but we do guide the SPY and the general one chat, so you certainly get some good information there. Otherwise, thanks for watching, and we